Hello, this is Gorkem Bolaca. Today I will be talking from London, and thanks very much to all Kallanish team to giving me this opportunity to speak at the Asian Steel Market conference. This is very important market for us because as a Galex, we are heavily involved in Asian markets, and we do source from Asian countries and sell into Asian countries. So it is quite important for us to watch all the developments. And today I will try to contribute as much as I can with the insights and some new information. And mainly we will be talking about China and Turkey, and hope to see you all in the near future in physical conferences back again. So, in China, what is going on? China is making a huge advancements in terms of policies, and in return, after these policies, we see really big, also significant advancements in the numerical improvement as well, such as 18% leap in this first quarter GDP already announced by China. And country is like the world's largest foreign direct investment destination. They already outpace United States, which was the leader in terms of foreign direct investments. But now it is China. And comparison between QBR 2020 to 21 is 48% higher, which is quite important for country, all these foreign direct investments. Nation made a big process in such a short time period, if you look at the last 100 years of China. But now they are going into a different phase in their development. And basically, as Xi Jinping already said, they are ready to cut the arm if it's for broader society's benefit. And now, steel industry is one of the main targets for the country. And since all steel production is made by fossil energy, and it is creating a lot of problems, environmental problems, China is quite focusing on these problems, and steel sector industry will be one of the biggest one that will go through changes and sacrifices. And real estate sector will be another main target, since at the moment the real estate prices are very high. And we should remember, when we mention about real estate sector, we are talking about 1/3 of steel, which is produced in China, goes towards construction. And real estate sector, any change in real estate sector will also affect Chinese steel industry. And then we should say that it will going through complete change because it creates a lot of inequality in terms of wealth distribution. Very expensive real estate prices, and like majority of the household savings goes for down payment of these real estates, and this is quite open to speculations. As also President Xi Jinping says, real estate is for to live in, not to speculate about it. They don't want any speculation in real estate sector. They just want people to live in the apartments or houses. They don't see this as a tool, financial tool, to make money. So in Beijing agenda today, the widening of wealth gap requires more efficient wealth redistribution. Like Gini coefficient test of China was 0.465 in 2019. This 0.46, meaning like the more you are closer to number one, this means the country is more equal in terms of wealth redistribution. There is lots of work to do, and they are taking a lot of actions, like different taxes for the wealthy. For example, more expensive real estate will get more taxes, etc. They already started to work on this. National fiscal avenue. But we have to remember one thing when we talk about real estate. Why real estate so far was untouchable? Just because China's national fiscal revenue, 45% of it comes from real estate. How come? And how can they do this way? Municipalities, they have all these lands. You name it, like Suzhou, you name it, Shanghai. All these municipalities, they have this land registered to them, and they are giving this lands to builders, and they sell this lands to builders, and builders pay the money. And this is the majority, like 70% of any municipality's fiscal revenue comes from this real estate sales, like land sales basically. They sell the lands to the builders. And this is very hard to change overnight. But this is also in agenda. Now they are taking actions. Carbon neutrality. Renewable energy is so much important, and China so far achieved in some production, in some industries, 80% production cut by using wind power and solar power. And after having this achievement, now new kid is on the block, which is hydrogen energy, and they are making huge steps towards it. This is like very disruptive. If they can achieve it anytime soon, it will be disruptive. It's something new and very efficient. So the country knows that they don't have enough oil. They have to import oil, and they take any kind of action to avoid using petrol kind of energy, fossil energies, in other words. And they made already big progress by using this solar and wind power. This is a huge number of 80% in some industries they achieved. So they shift their economy from less productive and labor intensive to value added, high tech, such as take the example of Shenzhen, take the example of Hangzhou. These are the new Silicon Valleys of China, and there are lots of foreign direct investments in these two cities. Of course, when we speak about wealth redistribution, we are talking about North and West China gets more and more investment, which is the poorer side of China, and it will get more equal distribution through this kind of governmental projects and investment programs in these regions. And digital renminbi, we will be talking, which is very important on the next slide, more in detail. How to tackle with petrol and iron ore deficit. Speaking of petrol, recently government made 400 billion equivalent USD, 400 billion USD equivalent agreement with Iran that consists of energy contracts, that consist of military equipment contracts. It is quite important, and China will be sourcing for this, at least short term in the future, they will be sourcing their deficit petrol from Iran. And they will pay in renminbi, not in United States dollars. And one of the last thing I would like to say, steel prices today, again, since 2015, Beijing involves in the steel pricing in China heavily, at different pace, at different time. But again, they become very aggressive because at the end of the day, the balance sheet of the state-owned steel mills is the balance sheet of China. And today, just imagine, with Beijing's push, hot roll producers, still state-owned hot roll producers are making $400 per metric ton approximately profit. And if you multiply by all the finished steel between $300 to $400 that China produces, then you will end up with how much profitable and how much contribution to this overall Chinese balance sheet through this kind of pricing policy of China. Tax rebate, benefit and cost, yes, there is a tax rebate will be diminished for sure. We don't know which materials will be affected. There are so many rumors. But again, China is trying to become independent of the energy that they import. They want to become independent from the iron ore that they import, and they wanted to even become independent from the exports. Because what they want to do, they want to prepare themselves for kind of big turmoil between West and China. And now all dependencies like export, even like 80 million ton steel, in their plan, they want to shift, and once this conflict even exaggerated, gets even aggravated between West and China, they can go on much easier than today. So all this preparation, even the tax rebate, plays some kind of role. This strategy plays some kind of role in it, and they want to focus more and more domestically. Digital renminbi. Let's think about China. Like 18% of the global output comes from the country. And you will expect something parallel, something match with it when you talk about same nation's currency. But when we talk about renminbi, it represents only a bit more than 2% of the global reserves. So this unbalanced situation is pretty much so much disturbing for Beijing and China to implement their future projects. First of all, there is significant resistance from United States. They really want, they take all the efforts for this One Belt One Road project not to go through. They use all, since United States dollars is the reserve currency, they use all their tools to prevent this, like sanctions, and they follow everything through the SWIFT. Since every single United States dollar world trade needs to go through American banks. So there is one way to do this, and maybe the most efficient way to do for Beijing, they've been working on this, is the digital renminbi. So they will definitely get much more potential to invest wherever they want without using United States dollars. And even more, they will get the benefit of, if they can do this as a like first government who implement digital currency backed up by the government authorities, which will be the first. Hopefully, they will get more benefits at the end of the day. And Chinese we need to remember one thing here as well. United States, financed by United States bonds, treasury bonds, etc. A lot of these bonds are offered to foreign participants, and a huge financing relief comes to the government of United States. China wants to do the same way, and they want to do this through digital renminbi. And they are opening $15 trillion equivalent domestic bond market to foreign participants. Greater demand for these bonds definitely will push down yields and lowering borrowing costs. And we are talking about like really exciting projects of China, and I have to say they are doing one by one, and taking a lot of already. They took a lot of effort, and they achieved a lot of the things that they wanted to achieve. There are so many, of course, a long way to go, especially this for One Belt One Road project. It's not, it is a huge project with more than 152 countries involved in it. And if you remember, today world trade equals to around $19 trillion. And One Belt One Road project, once it's completed, it will, according to the calculations of projections of Chinese government, it will give around $6-7 trillion per year to China. That's why it will shift all power centers in the world. It's already actually shifting. As you see, foreign direct investments of China already exceeded United States foreign direct investments. It is significant. People couldn't expect it. Like if we were talking 10 years ago, they might say it would be only a joke, but it's not anymore. So the same way, China is coming quite strong. And what are the problems at the moment? As last December, I was mentioning these problems. They are still on the table. It's not something to solve overnight. Non-performing loans of China, it is quite disturbing. And as you see, there is a huge, from 2017 to 2020, there is a huge increase. And I asked to my Chinese office, like, let's put this in a more, it's like something more easier to see, like this defaults, non-performing loans. Let's get an example of mortgage default in China. In 2017, like 9,000 households couldn't pay their mortgage back to the financial institutes. In 2020, it was 2 million. So this also shows, you can call this wealth distribution plays a role in this. Yes, it might. Remember, China, by the way, it's like one of the, in terms of household savings is like around 39% in China, whereas in 7% in the United States. And majority of the people go for this high savings just because they want to buy a property. They want to buy a like kind of flat house to get some more sense of security. So this is China. Then let's talk a little bit about Turkey. Since we are talking about Asian steel markets, and it is maybe for some people they already know Turkey is coming quite aggressive in the export markets because they need to be, they have to, they have no other choice. Since the majority of steel trade between Europe and Turkey is kind of prevented by latest European safeguards against Turkish steel. Turkish steel is looking for another avenue to give access, since Turkey became the net exporter in both flat steel and long steel. For long, Turkey has been exporter for long years, but they also became for the flat steel. So more and more material will be in Asia. They already start to sell a lot of hot rolled coil besides long steel to Asian markets. And we will talk about this. Let's give some snapshots. Let's about Turkish steel. So production altogether long and flat around 37 million ton in 2020. And like quite long production 23, flat production is 14 million ton. Consumption is 16 million ton. But there's also of course import. And at the end of the day, Turkey exported in 2020 6 million ton of flat steel and 10 million ton of long steel. The 6 million ton, of course, it's peanuts comparing to Chinese exports, but this is a normal situation, isn't it? So if you compare anything to Chinese numbers, it will look very small. But 6 millions at the end of the day can really make impact on any kind of markets when we talk about this is the quantity dedicated to export. In Turkey, there are 8 re-rolling mills besides these integrated mills, and approximately 6 million tons capacity altogether for 8 re-rolling mills, and 6.5 million tons of hot rolled coil consumption comes from these 8 re-rolling mills. So Turkey not only a significant exporter but also really important importer, and 1.1 billion USD total exports comes from only these 8 re-rolling mills. Let's look what Turkey usually imports, which countries towards Turkey imports, exports, and where do they import from. Like Russia, there is no doubt for hot roll and cold roll always takes number one in terms of imports because of the also proximity between Russia and Turkey. Material can reach quite quickly. And then European Union's countries, South Korea for cold roll, and these countries pretty much is the main countries to import from. And Turkey exports towards, as you see here below, all European Union countries as a like number one, number two, hot roll coil, cold roll coil. But this is changing significantly due to this restriction, due to these quotas implied by European Union. And really steel needs to go to a different place. And more steel we will see in Southeast Asia. As we already see, a lot of contracts concluded between Turkey and Vietnam for hot rolled coil, and we expect China is becoming a net importer of steel. And I think another new avenue for Turkey will be China in very near future. I would be saying like it can even take less than a year. So thank you very much to all my friends at Kallanish for the opportunity, and I hope we can meet soon in physical conferences as we all used to it and we like so much. Thank you very much.